All right, we're going to get started here in just 1 second. Just want to make sure, because we're going to do this as a live broadcast. I just hope that audio sounds good and you guys can hear me okay. I had let folks know that we're going to be doing this class, so hopefully everyone is tuned in, who is at least going to be tuned in for live streaming. Well, this is going to be an excerpt from the Warrior Pro classes. So, of course, that's going to be very familiar to those of you who are students, but I'm going to just pop that right up there. So this is an excerpt from Chapter 8, and it's Stock Type Daily Setup 8, Part 1. Intraday Parabolic Momentum. What is parabolic momentum? You can see it right behind here. This is Avis budget car rental. Stock goes from $180 to $315. It's currently halted going up. This is wild. This is crazy stuff. This is the type of stuff that, of course, as an active trader, we really like. So I'm going to get into this section in just a moment. Before I do, I want to remind folks that, again, this is an excerpt from the Warrior Pro classes. So those who are going to tune in and watch this on YouTube, thank you for hitting the thumbs up. I hope you really enjoy it. If you do, and you want to learn more about my strategy, you want to learn more about the classes, warriortrading.com is the place to be. All right, so I can enter this strategy, warriortrading.com/strategy. This page outlines my strategy. It outlines the class that I teach. I'm going to hide that right now because it's probably not going on by the time you guys are watching this. We've got the starter, we've got the pro, and if you want to register to a class and check that out, we'd love to have you do that. So, and I'm going to go back here to the dashboard. So from the dashboard, as a student, or as an instructor in my case, I can go ahead and log in here, and I'm going to pull up the scanners. Of course, CAR is not the typical stock that I would be trading, probably for the obvious reason that it's super expensive. However, in this chapter, we're going to be talking about parabolic momentum and how you can apply it to stocks of all different price ranges. And if you noticed, I'm up a little over $80,000 today. This may be as good a time as any to say and remind you that my results are not typical. Trading is risky. Most beginner traders lose money, and so you shouldn't attempt to blindly follow me or anyone else for that matter. And you should assume as a beginner that you will lose, and with that assumption in mind, trade in a simulator before you put real money on the line, number one. And number two, don't trade with money you can't afford to lose. So with that said, look at that volatility there. CAR, Avis, all the way to $340 a share, and then back down in within 10 seconds to $300, a $40 swing. So it's getting a little top heavy, I think it's fair to say. Now, I also wanted to share with you, let's see, I'm gonna move this up here for a second. So I've got something kind of exciting to show you guys. Let's see, let me look out here. So you may have noticed, of course, over the last few live trading morning shows, that I've done some surveys. So I've been doing some surveys to try to get some feedback from you guys, because I've recognized over the last 2 years, the market has changed quite a lot when it comes to trading. 2 years ago, 3 years ago, I was almost never trading pre-market. Now I'm trading every day pre-market. And if I don't have a good trade, I gotta sign back in, hang on. If I don't have a good trade by pre-market, then that by itself is an indicator that it might not be a good day for me to trade at all. So noticing this sort of shift in trading, I've also noticed a shift in the type of videos that students are interested in on the YouTube channel. And it's changed significantly from a few years ago, where we were seeing a lot of interest on recaps, and we were seeing very little interest on videos where I would do a class kind of like this. And now, one of the videos that I just recently taught was on dip trading. And that class, let me see if I can find it here. I've got it on my other screen. So that class on dip trading has been very popular, and let's see, where is it? Hold on, let me find it here. Oh, actually, well, how to buy, let's see, dip. There it is. So you guys can't see the analytics on this. I of course can, but this video has about 225,000 views in the last month or so, and the views are just going straight up like this. So these are the type of videos that students are interested in, traders are interested in. And so we're gonna revamp the YouTube channel here. And I'm excited to do it because what we're gonna focus on are the type of videos that you guys have been enjoying the most popular videos. Those are gonna be the live morning shows. Those are going to be these types of educational videos. And so it's exciting. And you know, I also sort of noticed, not to go on too long of a tangent here, I'm sure some people will just skip ahead to the class, but I've also noticed that some students will say, you know, I'm gonna try to just watch every single video that Ross has, every single old video he has. And I'll just see if I can piece everything together by learning from all these old videos rather than actually taking the classes. And the problem is a lot of the old videos, well, my strategy has evolved. The market has evolved. And so watching some of those old videos, I see some of the questions posted on them, and I realize that they're really not a very accurate reflection of the market as it is today. So I think that the path of least resistance, I'll just watch some of these old videos, I'm taking that option away. So a lot of the old videos, some of the ones from 3 years ago, 4 years ago, 5 years ago, we're gonna archive those, we're gonna set them aside, and we're not gonna leave them on the YouTube channel. So the YouTube channel is going to be the latest, the greatest, the most popular videos that you guys are really liking and that I can see just from the analytics. And the archives will be saved for students who wanna watch them, that's fine. But I think most students are gonna go ahead and go through the classes and actually watch the latest classes, which are also most relevant to, you know, the current market that we're in. All right, so so I just wanted to share that with you because we're really excited. We're about to cross over 1 million subscribers here on YouTube, and I had said that when we do it, I will be starting a brand new small account challenge. If we cross 1 million subscribers by the end of this year, I'll do a new small account challenge on January 1st. Okay, so with that said, let me jump in here, and I'm gonna move this down here. All right, so this is chapter 8, setup 6. So what setup we were on? We were on technical setup. Oh, see, those are technical setups. To give you some context here, the way I teach momentum, I teach the technical patterns, which would be the ABCD pattern, the first pullback, the second pullback, the red to green move, things like that. And then I teach the daily setup. The daily setup is the context, and context is very important. So the daily setup of a parabolic stock, for instance, or a blue sky setup, will be applying the same technical entries of ABCD, cup and handle, head and shoulders, but we'll have the knowledge that we're applying it to this type of stock. And when we apply it to this type of stock setup, these are the ones that I have found historically have particularly special potential. So intraday parabolic momentum, I'm going to be much more likely to take an ABCD setup on this stock than on one that's not intraday parabolic. Meanwhile, in the background, look at that car halted again at 360 bucks. So that's called a dip and a rip. Now it's a setup that we would only trade on a stock that's been halted. All right, so that was sort of a long intro to chapter 8, setup 8, intraday parabolic momentum. All right, let's get into it. Parabolic squeezes, you guys have seen them. You see this one in the background on CAR. You've certainly seen it on GameStop. You've seen it on a number of stocks. We saw it on DWAC. DWAC, I'll just pull the stock up there. This stock went from $10 to $175 a share. An absolutely crazy move. And what you'll find on a lot of these patterns is that stocks go up and they come back down. They go up and they come back down. Now, I'm a long bias trader, so I trade the market primarily to the long side. When I began trading, like a lot of beginner traders, I didn't even know that you could short stocks. That's first of all. So I just assumed you'd trade to the long side, you buy and then you sell. Eventually I learned that you could short stocks. But then of course, back when I was getting started, the number of brokers out there wasn't what it is today. The availability of shares to borrow was much more difficult. And so most traders just traded to the long side. And the thing I said yesterday is, it's kind of like someone handing you a guitar. It's already strung to play with the right hand. Everyone assumes you're going to play the guitar with the right hand because most people do, right? Right-handed style. And the market is sort of that way too. It's structured just systemically, fundamentally, to favor the long side. It's obvious. It's obvious from the short sale restriction. It's obvious from the difficulty to find shares available to borrow. It's obvious from the fact that you can't short stocks in a retirement account, that you need a margin account to short stocks. It's harder to short. And so naturally I traded the long side. So while it's true that you could trade the opposite side of this, and I do teach a strategy for shorting momentum stocks, we're going to focus in this chapter on being on the long side. So this is parabolic momentum, of course, GameStop, also parabolic momentum, and this is an example here of parabolic momentum, without a doubt. But what goes up comes back down. There was actually a story of a stock, BPTH, and I think I'll show you an example of it. So I'll hold on the story till I show you the example. So I'm going to read this to you. Parabolic squeeze stock type. When a stock is experiencing a parabolic squeeze, whether it's a multi-day squeeze or an intraday squeeze, it'll offer a number of opportunities for trading long and short. A traditional bull flag or an ABCD setup can certainly be traded on a parabolic stock. However, the range will be much bigger because the stock is more volatile. So the winners could be much larger than average, but the losers could be bigger than average as well. Parabolic stocks were one of the most difficult for me to learn how to trade because they move so quickly, I felt like I couldn't manage my risk or have enough time to calculate a safe entry. As I gain more experience, I've been able to become a lot more comfortable and confident trading parabolic momentum and finding those good entries. So I now find that they are actually the stocks that I make the most money on. And here you have OLB continuing without me. And this is something that I've mentioned a number of times. It's impossible to capture the entire move. If you capture a good piece of it, you're doing well. And if you captured a piece of this, or you jumped in there at that pivot of 879 for the move through high a day, good job. You'll never get the entire move. So at a certain point, you got to be grateful for what you got and take the profit off the table. Successful traders take profit off the table. Beginners, rookies, keep trading, overtrade, and give back profit. So typically for a stock to become parabolic, it'll also meet one of the other characteristics of a strong stock to trade. Those are broken down earlier in the Warrior Pro class. I'm not going to reiterate them now, but you understand them, especially Warrior Pro students. Recent reverse splits, recent IPOs, and SPACs are some of the more common stocks that can become parabolic. Dry ships, DRYS, 2016. Does anyone remember? This is now 5 years ago. More than 5 years ago. So in November 2016, I witnessed the biggest parabolic short squeeze that I had seen in my career until that point. It was on DRYS. The stock was down substantially over the preceding several years, and the company had performed a series of reverse splits. I believe they may have also done some secondary offerings. They were losing money, hand over fist. It was looking like bankruptcy, and being delisted from the NASDAQ was imminent. Following the last reverse split, the stock began to surge up. First 50%, then 100%, 250%. Traders holding the stock short, which was logical given the condition of the company, began to get a little nervous. When the stock approached 500%, traders were panicking, buying to cover short positions, and long traders smelled the blood in the water, and they started jumping in. A short squeeze was about to begin. Over the course of 5 days, the stock squeezed up over 2,500% from $4 to over $100 a share. Now, while I had previously seen some short squeezes at that time of a stock going from maybe 50 cents to $1 or 50 cents to $2 or $3 or something like that, maybe $3 to $6, seeing something squeeze from under 10 to 30, 40, 50, 75, $100 a share, it was incredible. And what made it even more impressive was how quickly it was jumping $4 a share. You could press the buy button and a minute later be up $3-4 a share. Now, at that time, I didn't trade it nearly as well as I could have if it happened again today. I was sort of left wondering, how could I have traded it better? I was watching some of the sympathy momentum occurring on other shipping stocks, and this is very common. When you have one stock that's going crazy, you might have 2, 3, 4 others that start kind of moving because they're in the same sector. And this was the case during 2016. GLBS, EC, TOPS, DCIX, SHIP. These were all other shipping companies. And so several others were squeezing up anywhere from 100 to 1,000%. They had no news of their own. Just they were squeezing because they were in the same sector as this other stock that was squeezing. And that's an irrational market. Now, a reminder, the market can be irrational for longer than you can remain solvent, which is to say that you may have the right idea that a stock like DRYS is really going to be worthless eventually. And eventually it came back down. But could you have held short from $2, reverse split here not adjusted, all the way to 800 and then back down? No way. Right? Not possible. I mean, just impossible. So the DRYS short squeeze from 4 to 100. So this is what the chart looked like here. You sort of had day one, it started pre-market, held through the morning, and then in the afternoon started to take off. Pulled back, next day pre-market, squeezes up, pulls back next day, takes off, pulls back, really starts to take off, holds its level after hours, pre-market, next morning, up again, pulls back, up again, and then this day here, it got halted by the exchange. So it finally got halted. The exchange said, what is going on with this stock? And when it resumed, it was a big haircut and it sold off, which is another reminder not to overstay your welcome. Now, stocks can get halted when they're up a lot for no good reason. The exchange wants to know what's going on, and in this case, when it resumed, it came down a lot, and that's not totally uncommon. DRYS daily sell-off and reverse split history. So just reverse split after reverse split after reverse split. For those that don't know about reverse splits, when a company does its initial public offering, they sell shares onto the open market. The stock has to stay above $1 to maintain listing requirements with NASDAQ and NYSE. If it goes down to 50 cents, the stock is not in compliance. The easiest way to get the stock back up above 50 cents would be for it to be a better company. Short of that happening in a short period of time, to regain compliance, they will do a reverse split. So they have let's say, 100 million share IPO. There's 100 million shares available to trade. The price is 50 cents. They decide to do a 10-to-1 reverse split. The next day, the stock's at $5. Awesome, 50 cents all the way up to $5. But the float has dropped from 100 million down to 10 million. Because if you were holding the entire thing of 100 million shares at 50 cents and the next day it's at $5, you're rich. Well, then you realize you're only holding 10 million shares and you actually have the same amount of money that you had the day before. So it doesn't affect the amount of money that you have in a trade, but it reduces the float. A history of reducing float, reducing float, reducing float, often followed by secondary offerings, selling more shares onto the market, increases float, and we see this cycle again and again. And it's worth noting just because it can sometimes be the case that a stock will have been beaten up for a very, very long time after a series of reverse splits, and then finally you get that big short squeeze. Sympathy momentum, GLBS on the daily chart from $4 to 23, EC from $2 up to 8, 400%, DCIX from $2 to 26. I mean, 1,000%. TOPS, another big move. This was all sympathy momentum. So when you have a stock today like CAR, you know who's catching a little sympathy momentum? Hertz, HTZZ. Now, Hertz is see how they're trading so similarly, but Hertz is not the primary stock. It's the sympathy stock. So when the main stock rolls, the sympathy rolls even harder. That's almost always the case. All right, so news versus no news. Now, typically when a stock has no news and is up 100, 200%, short sellers will see it as a great opportunity to take a short for a drop back down. If that stock then keeps ripping 300, 400% higher, it will certainly squeeze out early short sellers, as long biased momentum traders are giving into FOMO and buying at irrationally high levels. I've seen stocks go up as much as 4,000% in one day, and that's been with no news. So back to the story on BPTH, Biopath. So this is a stock that was up big, 200-300%, no news. Absolutely no news to account for the move. There's this, it's now a legend. Story tells that, legend has it, hedge fund trader started shorting the stock, scaled himself all the way up to an 800,000 share short position. And when his firm realized that he was getting squeezed out, they began liquidating his position. Liquidating an 800,000 share short position as the stock was squeezing up 18, 20, 25, 30, $40. He lost almost, I think it was $15-20 million. A crazy amount of money to lose. The stock had no news. And it ended up that it did come back down. But how much red could he afford to hold through? Look at GameStop. I mean, GameStop wiped out billions, with a B, billions of dollars from hedge funds that were short. You're not talking about small losses here. These are hedge funds that some of them needed a bailout. We'll go back to the daily chart on this. So, I don't have to repeat all the, GameStop story. You guys know it, but this was an epic short squeeze. This was epic. So news versus no news. I always like to trade stocks that have news. I usually prefer it. However, there are times that we'll have no news and the stock still makes a big move. The thing to be mindful of is that when a stock has no news, it's got a little bit more risk of getting halted by the exchange because, when you have a news headline like really good earnings or a pharmaceutical company that's cured cancer or whatever it is, it's obvious that, there's a reason that people are buying it. But when there's no news, it's a little bit more suspect, and so the exchange can halt those stocks pending some review. This was a no news squeeze on BDR, then a 50% drop. So it was halted by New York Stock Exchange, NYSE. Goes from $1.60 all the way to $3.80 a share. They halted it. They asked the company to provide some reason why the stock is going up, and the company responded that they know of no reason for the recent increase in price and trading volume of the stock. There's been no material developments or change in circumstance. This is the template boilerplate, what they always say when you get those T12 halts. Or sometimes it's halted pending news, and this is the news. This is another one on MDLY. Again, a NYSE stock. Stock went from $1.20 to $2.80, no news. This is another one on RHE. This stock went from $3 to $16, no news. This is another one here, also NYSE. So you'll notice this pattern that this is much more common for stocks listed with the New York Stock Exchange than listed with NASDAQ. Important to notice if you're looking at trading a stock that has no news, which exchange is it listed on? And this is another one on ACY. This went from $8 to $40 a share, but then it came all the way back down. Now, it's worth noting with ACY that ACY as a parabolic stock actually recovered that level. So this was the day it made that really big move to 38, and it recovered. I mean, it took a while, but all the way up there to $60, almost $70 a share. So worth noting for sure. And in the background, we've got OLB, my big winner from today, continuing. Love to see that. Awesome. And I'm grateful for the money that I made on it. Did I leave some money on the table? I sure did. But every single day, you are either leaving money on the table or you're giving back profit. So today I left some money on the table, but I didn't really give back any profit because I finished at my high of just about 80,000. By the way, those watching live, please do me the favor and hit the thumbs up if you haven't already. I hope you're enjoying this class. So let's look at some examples of parabolic momentum. Again, we're talking here specifically about the type of stock condition, not the specific entry. Specific entries are going to be something we have, of course, for Warrior Pro students already covered earlier in the Warrior Pro class. We're talking about the technical setup, the technical entry. But although DRYS was the first really epic stock that I witnessed, it wasn't by any means the first one to ever happen in the market for a short squeeze. In fact, there were many before DRYS that were even bigger, and there have been many since that have been even bigger. Through 2020, 2021, the frequency of parabolic momentum stocks reached an unprecedented level as overall trading volumes increased and more traders have been joining the markets. I currently expect this trend to continue. I don't have any reason to think it won't. And therefore, I believe it's critical to study the price action of parabolic stocks, including the screenshot examples, of course, but more importantly, live trading archives. All right, so here's just a chart. Stock goes from about $1.20 to $4 a share. That's nearly 400% in one day. That's incredible. I mean, that's awesome. If we had one stock like that every single day, 400%, 300%, we would be so grateful. Now, it's not going to happen every day, but it happens more often than you think. And ooh, look at this. I'm just going to pop the chart up here. Look at that volatility on OLB. It broke 12, hit a high of 1237. Now it's back at 1020. I can pretty much guarantee you that there's some traders out there who bought right here, maybe added right here, and then, uh-oh, still holding. Maybe adding more. And then it starts to drop. So, this is something that you have to be careful of, not to overstay your welcome. And then just like that, you're giving back profit. All right, so back to NNDM. So we've got NNDM here. This was, let's see, what are we looking at? And then this is Pixie, sorry. So NNDM, again, in terms of chart patterns, not to overly break this down because I'm going to show you some live trading archives, but obviously you see some pullback patterns here, some pullback patterns along the support of the 9 moving average, and then it rallies back up. Here on Pixie, this was one where you had a couple of really nice entries. This was a particularly nice one right there. Let's see if I can get my, let's see. What is the, turn on laser pointer, right here. Right there, that little pullback, that was nice. 10, all the way up to $14 a share, 40%. That's phenomenal. Drop, squeezes up at the open, halts up. So this is a stock that goes from $6 to $15 and on really nice volume. This is the type of stock that's the right type of stock to trade. So again, just to step back for a second, what is the right type of stock to trade? So you may recall yesterday, I didn't take any trades at all for those that were watching the morning show. I didn't take any trades yesterday. Why? Well, there wasn't anything that looked really good. So what does look really good mean to me? Generally, at this point, I'm looking for a stock moving pretty quickly. And usually, and I prefer this, on breaking news. Now, you don't always get the breaking news. Sometimes it's moving quickly on no news and it's technical, but I like to trade stocks moving quickly. Yesterday, we had a number of stocks that were sort of range bound. They were up a bit, but not a lot. They were moving, but they weren't moving very quickly. They were a bit choppy. And it's one of those things that you know it when you see it. And if you're sitting there thinking, I don't know if this is the one, the fact that you're saying, I don't know, means it's a no. It's either a hard yes or it's a no. So Pixie, this was a hard yes. With it squeezing up like this from 9 to 10, that's a hard yes. Absolutely. And there's other technical characteristics that I would look at, including the share price, the float, the sector, the daily chart history, and things like that. Here's one, QLGN. Stock goes from $9 up to $18, doubles in one day, 100%. So this is a 1-minute chart. You can see it's a little choppy. Not as much of the straight up parabolic, but some nice opportunities on it for sure. All day parabolic momentum. Carve, this was a bit of a protest stock. Carve, UONE, there were a couple others that during Black Lives Matter protests or activist things that were happening, especially last year. This is a stock that gained attention because I think maybe the CEO or the founders are black or something. I don't know the details of it, but in any case, the stock goes from 3 to 4 to 5, pulls back, goes to 6 to 7 to 8 to 9 to 10. And it was crazy. And that was very similar with DWAC, the stock, the special acquisition company. It's a SPAC that is going to be merging with the Trump media, Truth Media, whole thing. It becomes a bit of a protest, a political stock, which I don't know if that's a new thing. People who have been in the market longer than me, I suppose, would know. But and I've been doing this for a long time, but this was sort of something new to me. So we had it on Carve up to $23. I mean, these were huge moves. And like I said, you could get in for some of these breakouts and boom, be up $1, $2, $3 a share. You know, with a 3,000 share position, just like that, you're up $10,000. And I was finding that I was stacking the profits up really quickly on these. I'll say again, and just to do this intermittently, My results are not typical. I have been trading for a long time, so you shouldn't try to blindly follow me or anyone else for that matter, because blindly following is not a recipe for success. I know there's a lot of alert services out there. I don't do an alert service. We don't provide trade alerts. We don't do email, text alerts, stuff like that. I don't think that that's a really strong way to learn. I think it's helpful to understand what someone's trading, but trying to blindly follow is not the way to do it. You've got to learn the strategy. And so if it's my strategy you're trying to learn, you're doing it right now by being in this class. And then you've got to practice in a simulator. And don't trade with money you can't afford to lose, because all the data that we have right now tells us that most beginner traders lose money. So be smart about it. All right, CHNR, this is a Chinese company. This squeezes up 300%. And wouldn't you know, all of a sudden you start seeing sympathy momentum. So you start seeing 4, 5, 6, 7 other Chinese stocks squeezing up as well. Even though the other ones might not have had any news, it's sympathy momentum. Now, WEI, parabolic momentum after hours. From 350, it closes at the high. That's a power hour trade. You get a squeeze after hours up to 750. A pullback, a squeeze up to 8 and to 9. Stock goes up 100% after hours. That's not as common. Why? More traders are trading pre-market and in the morning. Pre-market is great for traders in Europe. It's great for traders who are in, New Zealand, Australia. It's fine for traders sort of across the board. The only traders it's not great for are traders, I suppose, in Hawaii and maybe Japan, Hawaii, Alaska, California. Because, of course, pre-market starts at 4 a.m. Eastern, New York time. So 4 a.m. is the beginning of pre-market. So you could be in Italy, and 4 a.m. So six hours forward, you're talking 10 a.m. right? So it's still just regular morning time there, which makes it very easy to trade pre-market. After hours trading, U.S. 4 o'clock. Yes, you will have some traders out in California, some West Coast traders that will trade after hours. But of course, most European traders are asleep or, kind of for sure winding down, not looking at taking trades at, 11 o'clock or midnight their time. So we don't usually see as much after hours, but occasionally. Here's a recent IPO into a parabolic squeeze. Recent IPO breakout, one of my favorites. So we get the recent IPO breakout, goes from $4 to $30 a share. If it hit 40, it would have been 1,000%. From $4 to 30, JFIN, crazy. So the stock goes from 4 to 6 to 8 to 10 to 12, pulls back hard, recovers afternoon all the way up to $30. Multiple halts, circuit breaker halts. Not going to talk about those in a lot of detail right now, but of course we do cover that in the classes in quite a lot of detail. Parabolic momentum on PEC. This is a gap and go. Squeezes up to 6, halts once. You can see the gap, opens higher, halts a second time. Opens higher and goes up just towards the third halt before pulling back, up 50% in 15, 20 minutes. CAR over 400. Let's take a peek. Holy smokes. CAR. Wow. So I have the level 2 right down here. So I had the level 2 up, and I saw right here it was almost halted up at 388, and then it dropped to 331. Look at that. In 20 seconds, 30 seconds, a 50-point drop. Whew. Yikes. Scary stuff. But this is up 138%. This is a short squeeze. Absolutely. This may be one that it's hard to manage risk on, but it's a short squeeze. And so just the fact that it's a short squeeze alone, it's worth watching, it's worth studying. Again, this, unfortunately, what would keep me out of this is the spreads. The spread is the difference between the bid and the ask. So here it's crossed at 415 because it's a halted stock. But if you look at OLB, for instance, 82 by 91, is a 9-cent spread. So the spread's constantly changing as the stock is actively trading. It's 100 million shares of volume, nearly. But big spreads can be a challenge for sure. Harder to manage risk when you have a big spread. And again, this is not meant to be a cohesive watch this class and you'll be able to trade profitably. No, you will not be able to trade profitably just from watching this class, just from watching any class. There is no guarantee in the market. Even as a student, there's no guarantee. There's no implied or stated guarantee that you will be successful just because you take a class or watch a class. It's a lot of hard work. There's just no question about that. So just to say that. But stocks like these, they are the ones to practice on. They're the ones to watch and to try to get good at, because when you start to see these, you start to get familiar with the pattern. It's the right thing. You're in the right direction. But there's so much more to cover. This is just one section of a huge class. There's so much more when it comes to the exact entry, the exit, the routing, the hotkeys, how to understand halt levels. I mean, it's so big in terms of the level of what you really want to understand before you start trading with real money. I'm just going to grab a curriculum here just to show you guys. So this is our current syllabus right here. This is the Warrior Starter course, 15 chapters long. All right, and this is the Warrior Pro course right here, the class that I teach. So this is a pretty comprehensive class. This is not just a couple videos. I mean, you're watching a couple videos on YouTube, but this is a very comprehensive class. So just to put it in perspective. All right, so back here, so COHN, COHN, this was around the same time as CARV and UONE. So I don't remember if this was it was like Black Stocks Matter. That was like, I think that was what was trending or something. But that's what I was hearing people say. So, but I don't know on this one. I wasn't totally clear if this was, because I think some were getting that label, but they really weren't. But they were getting it because people wanted people to buy that stock. So you have to be a little careful. So anyways, there's a couple on COHN. PHUN, stock is at $1, goes up straight up to $3, 300%. I mean, just absolutely crazy. All right, so VVPR and a late day breakout. These are just chart examples. These are the type of stocks that are parabolic. So SPI is another one. KXIN, this is another one. So I think you get the idea. These are the type of stocks I want to trade. Of course, for students, you already have access to this chapter as the full chapter that has a bit more detail. But just to keep the YouTube video from getting too long, let's see, we're at about half an hour now. All right, so KXIN, yep, crushed that one, 102,000 on the day. Big move from 350 all the way up to 13. These arrows are the type of places that I'd be a buyer. Parabolic momentum on TAOP, the 5-minute on the left and the 1-minute chart on the right. Let's get in, I think, to some live trading examples. Kodak, this was another one last year, from $20 to $60. Crazy, crazy, crazy. I mean, my goodness. PPSI from $3 to $9.50, that's 300%. UONE, that's the one from 14 to 40. UONE, another day there. Another one on UONE up to 54. I mean, these. So one of the things I encourage traders to do is to print out charts like this and put them around your desk as a reminder when the market is slow that that's what you're looking for. That's what you're being patient, and that's what you're waiting for. Trading, I am so bad at this, but I'll say it anyways. Sitting on your hands, having the patience to not trade when the market's slow. It is so important because you end up taking, a B or C quality setup. It's not really that great. You catch a loss on it. Your accuracy is not going to be as good on low quality setups, and the winners won't be as big. So you take a loss on it, and then you're like, well, now I'm red. I've broken the ice. All right, now I'm going to try to make it back. You try to make it back on some more B and C quality setups, and sometimes you do, and you finish the day small green, whatever. And other times you just dig the hole deeper and deeper and deeper, and you're thinking, man, I wish I had taken my foot off the pedal a lot sooner. Look at this. So this is about to halt. The halt level is at 68. But look at how the spread is, 55 by 57. This is a very, very, very difficult spread. This is going to be one of the most difficult spreads I've actually seen in a long time. These are huge spreads. So right now, if I was in with 10,000 shares, let's just say, that's 65 on the bid. It just dropped 3 points. That's $30,000. It went from 68 to 71, 70 by 73. So this is an example of a stock that, again, you could trade it with 10 shares. You could kind of just be like, oh, I'm going to move the decimal point and mentally think of it like that. With 10 shares, you could probably make a little bit of money on it. But golly, you catch another one of these red candles. one of these types of candles back here, and it's going to hurt. And it looks like, here we go, we're starting to roll just a little bit. Nope, and it breaks. So it's starting to roll just a little bit there, false halt, and then up to 89. So it's pinning at the halt level. It's chasing the halt level. Circuit breaker halts, if you don't know about them, I've got a couple other videos about them, certainly on YouTube. I've got a bunch about it in the classes. Is it going to be a real halt or a false halt? It's staggering. It's limping into the halt. It is a halt, but a little bit of a limp into that halt level. So that's EQ. ACY, Parabolic stock, no news, goes from $8 to $38. Now, there's no doubt about it. This is going to be an easier stock for me to trade. It's going to be easier stock for a lot of us to trade. Why? It's cheaper. I can afford it. I mean, even for me, I don't keep millions and millions of dollars in my trading account. How many shares could you even buy on a stock like car? $400, $500 a share. 1,000 shares is 500 grand. 4,000 shares, you're talking about $1 million positions. So, you're talking about a lot of risk. And I just encourage you to be mindful of that. So a lot of traders inevitably focus on lower price stocks. And when I got started, I did too. And I actually focused, when I first got started, on penny stocks. And you want to know why? I had a friend in high school who made some good money. I don't know exactly how much he made now, but he made enough money trading penny stocks. He bought a Nissan Pathfinder, put a nice subwoofer in the back. He had a big screen TV in his bedroom, which was down in the basement at his mom and dad's house. He got an arcade machine, a sick arcade machine. He got an awesome sound system. And I mean, it was pretty cool to be 17, 18 years old, whatever he was at that time, to make some money trading a penny stock. I mean, it was pretty amazing. And the fact that he did it made me think, man, all of a sudden my eyes were open that there was, there was a possibility. Even as remote as the likelihood was of me making money consistently, I was young and I was stupid enough to think that maybe I could do it. And that's why I always remind people how risky trading is, so you at least know what you're getting into if you're gonna make a go at it. But so when I started trading in a more serious way, I was focusing on low price stocks because I didn't have a lot of money. So I just assumed you have to trade penny stocks. But in fact, trading stocks, $3, $4 a share, these ones anywhere from 2 to 20 seems to be the sweet spot for the type of stock that can really make a big move. That's been my experience. Now, GameStop was a little higher, and certainly car is a little higher too. But so here's GameStop. This is a screenshot of me holding 250 shares. I'm in at $229.24, and I'm up $100 a share. So I suppose a reminder on something like car that even with small size, those winners can add up. 250 shares, $100 a share is $25,000. $25,000. But it's still a lot of money. It's still $75,000 in the trade. So GameStop, I've got a lot of drawings on this chart. This is a lot of technical analysis. I traded this one quite well. I could have done a bit better, but I was limited that I didn't have enough buying power in my account. I didn't have enough money in my account to really, really crush it. And to have had the money in my account to really crush it, I would have then inherently also been taking $5 or $10 million positions. And I know that there are traders out there doing it, but man, that scares me. That scares me. You never want to empower a trade to potentially end your career. You never want to do that, even with a lot of experience. Parabolic momentum here on GLSI. So this is a stock that had news out pre-market that morning of it was something about breast cancer, something that was very positive. Stock immediately goes from 10 to 40. So one of those straight up parabolic kind of algo spikes. It pulls back and then in the afternoon goes to 36 to 40, 47, all the way up to $180 a share. Now, of course, when it was up around, 75, 80, 100, and 120, 150, it would have been difficult to trade because the price is so high and the risk is of course high at that point. But, at the same time, had you been in from down here and held a couple of shares, 100, 200 shares, then all of a sudden you're coming back to a really nice trade. So that was, and there was, I did some live archive review of this because this was a bull trap and then a bear trap and then a rip higher. It was really a pretty special setup. So again, just the stock type, GLSI, so parabolic momentum. So, all right, let's look at, I'm going to get some live trading archives going here. Let's see. All right, so, and let's watch resumption just for the heck of it on GLSI. So it opened a little, sorry, on CAR, it opened a little lower. The high is 490. But see, look at that, 65 by 70. It's a 5-point spread. And there you go, back to 89. So that's a dip and rip back through the high. 95 should break through 500, but there could be sellers stacked. It's a very psychological level. And it just goes to 520. It goes to 528 the way a stock would break $5 and go to 510, 515, 520. $28 a share. Crazy. And the market can make you feel pretty stupid sometimes. You know, I'm the one sitting here who hasn't taken a single trade on it. All right, so let's see. Let me get, you know, as Elon Musk crossed, what was it, $300 billion net worth, I thought, man, I really am pretty stupid, aren't I? I've been sitting here for, you know, all these years. Tesla just keeps going higher and higher and higher, and, you know, guess I'm really an idiot. Oh well, can't catch them all. I do find some profit in the market, and I'm grateful for that. So I've, you know, you find your niche and you stick with what you know. All right, so CAR halted up, showing 547. So we'll watch that on resumption. So GLSI. All right, so let's watch live trading archive here on GLSI. All right, so this is a long one. These are available for Warrior Pro students. I'm going to highlight some of the interesting spots. All right, so GLSI here. So it looks like, so trading it with really small size in this area. Probably just sort of like a little cautious on it. All right, so the halt time 49. Oops. SLS, a quick trade on that for the break of 5. That's a whole dollar, half dollar setup. It's up 35%. Yeah, take the trade into the halt. Nothing huge on that. Problem is it was too close to the halt level. That's not really the one that's exciting though. So GLSI, the last print was 61.36. So we'll be watching resumption on GLSI. Let's see. There you go. So there's resumption. Sorry. So there's resumption on GLSI. And you see how it breaks. It does a dip and a rip. Next halt to 74. So that's very common. It's similar to what we just saw. It's going to halt up, then it's going to go higher, up to 78. Let's see if we can get into the bigger moves. There's showing $95 resumption there. So quick trade for the break of 100 perhaps. Average for me is 87.22. So I'm up $4,000 here with 400 shares. So there's $100. Taking some profit, there we go, as it breaks through that level. So I take the profit as it breaks through the critical level of 100. And then it goes to 104, it goes a little higher. And so this is what I mean with these types of trades where all of a sudden you're up dollars a share. It's crazy. GovX, trade on that one. So GLSI showing a 126 resumption. So the resumption on CAR is showing 535. So we see the approximate resumption price. It's a bit of an approximation. So I'm now holding 210 shares at 121. It looks like it resumed and then squeezed a little higher. Unfortunately, I don't have the chart. Usually I would. So GLSI, yeah, see, so look at that. So on this one, so I'm holding one share on it. So it halted. It looks like it reversed. It did one of those peaking at the top and then halting back down. Let's see. So one of the things that we often notice with these, it doesn't really matter. So one of the things that we often notice with these is that they will halt many times going up. And if this does CAR, for instance, halt going down, that's something to be really, really mindful of. You don't want to think that these will just keep going up forever. I mean, of course, some of them do some pretty irrational things, but you still want to be cautious with how you manage your risk. So let's look at RHE. This is another one that was pretty cool. So let's see, RHE. So RHE, this is one that I traded pretty aggressively. So on this day, I'm sitting up 79,000. This is another opportunity for me to remind everyone that my results are not typical. All right, so let's see, let's get oriented. So RHE looks like, look at that. So watch, oh man. So I use the pause button to go full screen and out, but it also to go pause and unpause, but it also does full screen and not full screen. Okay, so RHE. All right, so let's get oriented. Okay, stock is right here, up 200%, 5.5 million shares of volume. This is the chart. It had squeezed up from $1.50 all the way to $4. A strong pullback to $3. Now curling back up, 393 at halts. It opens, dip and rip. I'm looking now for a trade long for the break of 5. Bought 9,000 shares at 492. And that's high. That's an extended entry at that moment because it's up 200%. There's no news on it. It's sympathy to ACY, which was also moving quite a bit. But here we go. All of a sudden, it skips 5 by 530, 507, 535, right? So if you've ever gotten yourself stuck trading, I don't know, something like Sirius satellite radio, and it looks like this. Oh, CAR. So that's not too surprising on CAR. So first halt going down, right? So it's reversing, coming back down. So it'll come back down a bit. But if you've ever found yourself trading something like Siri, it's a stock that just doesn't move. It just doesn't move. It's a very slow mover. It's a feature nature of the float, the market cap. So it's a slow moving stock. But then you have, on the other hand, something like RHE here, and these are fast moving stocks. These are stocks that are parabolic. And I'm not going to say that this is for everyone. There's not one strategy that is for everyone, just plain and simple. This is a aggressive strategy that I have of trading momentum. Trading momentum is buy high, sell higher. Buy high, sell higher. It's very volatile, and you have to be really, really careful. So RHE, there you go, up to 540, and I'm taking profit into that level because I know it's extended, and then it goes a little higher to 571 without me. So I'm like, all right, well, made a little bit of money on it, like $1,700 or something like that. So I'm up 1,700 now on RHE. All right, so we're going into a halt. So now we're gonna look to resume. So let's see, is this a 5-minute long halt or a 10-minute long halt? Looks like it may be 10. So jumping 10 minutes ahead. All right. So we're watching for resumption. Trading a couple other stocks on the side, waiting for resumption. Oops, let's back that up. So we did resume there. Oh, and I see scaling up. So it's about to resume. So RHE, it's up 250%. And look at that. It resumes at 660. It halted at 578 and it resumes at 660. And now I'm adding for the break of 7. There's 710. There's 718. There's 726. There's 747. Now there's 650. That's a reminder. What goes up can come back down. There's 630, but notice at 630, 40,000 share buyer on the bid. Dip trade, possibly. Back over 7. And adding right there for the break back over 7 and watching 750. It takes some educated intuition to get the feel for how these trade, to know when to panic sell and exit and when to hold for the bigger move. Got 23,000 shares of it at $6.99. What am I looking for? The breakthrough 750. There you go, 750. It rips through. There's 770, 785. I put an order to take half off the table, 768. Now that would be about $10,000. Start scaling out. So I start scaling out, take some profit. And then I'm very likely to add back. I'm not the type of trader that just buys, sits back and just kind of lets it do its thing, and whatever. I'm actively trading. So I'm happy to get back in if this shows the strength that I'm looking for, which would be a break back over 750. Now, I want to pause this for 1 second. And if you notice on CAR right now, this is something that we always like to pay attention to. So this was halted at 11:04 and 32 seconds. So it should resume in a moment. It was halted going down at 481, but it's showing a resumption of 500. That's a resumption higher. So if it squeezes right back up over 510, 520, and through the high, 545, that could be, it's bullish. It's bullish that it's showing an open that's higher than the halt down. Unfortunately, the risk of trading a stock at this spot right here is that it's up 170%. It's up a lot. So while it did open a bit higher at 500, it immediately came down. This is a dip spot possibly at 62. I'm not going to buy it. See, just that moment right there, and let's just go to the 10-second chart or 1-second chart, and I'll just show you what I was seeing. I'm not going to buy that because, of course, the 5-minute context. But right there, right in there as it was starting to level, that can be the beginning of the curl for a dip and rip. But context is important. And in this case, because we had multiple halts and because it's up as much as it is, the risk would have been too high for an entry. And there probably wouldn't have been enough buyers right at that spot just because of that chart pattern. So that momentary pause, though, when it's pulling back, it starts to pause. That's something I look at really closely. Okay, so let's flip back to RHE, parabolic momentum. Again, those watching this, I hope you are enjoying it. A little mini class here. All right, let's get back into it. So we've got 673. So I added at 644, and that was just a couple seconds ago, it looks like. So it does a little flash dip down there, punch, punch, boom, boom. So added at 647, little dip trade. Taking a little profit up around 690. So it took a little off the table, 690. This is a red topping tail. So you've got a fairly extended setup here, taking a little more off the table as it comes back up. Not sure whether or not it's going to make the move all the way back to the high. Of course, we know it does, but we don't know yet. It's always anyone who can trade, using I don't know, time travel, can be a very successful trader, because once you know what's happened, it's easy to go back and just buy it at a better price. But the reality is, we can't trade that way. So now I'm in with 30,000 shares, 38,000. So someone is stepping up to the plate, and it's me. Stepping up to the plate here, 38,000 shares of this stock at 774. Looking for a continuation. There's 810. Break of 8, taking half off order to take some off the table, and no problem getting filled there. That's coming up to the whole dollar, so a decent spot to take some profit, especially on something that's extended like this. Added back on the dip at 66 and 76, actively trading. Sometimes I think that I would do better if I just held, because when some of these go up $5 a share with 30,000 shares, 3 times 5, you're talking about a lot more money than just flipping in and out the way I do. But at the same time, you kind of get used to what you're used to. Added there up to 23,000 shares. Want to take some profit as it breaks through the high. These types of stocks are so fun to trade. It's up 400%. This type of volatility is just phenomenal. So we're coming up to another halt. It's halted, holding 7,000 shares. Up currently 113,000 on the day in this live trading archive. Students can rewatch these as many times as you want, by the way. All right, so gotta fast forward this just a little bit. Ooh, back up. So now, this is where things start to get interesting. And you hear me talk about how it's pulling away. It's starting to pull away. So I'm in at 837. Now it halted at 848. Or no, sorry, it halted at what was it? Yeah, it was around, I don't know, 870. It opened and we're already seeing 950. Now, where are spots that I would look to add? 55, 65, 75, 85, looking for the break over 10. Dip trade here, added up to 15,000 shares with hotkeys. Taking a little off the table at 93. We've got a seller at 10. Will it break 10? Holding 10,000 shares, added for the break of 10. Taking some profit as it breaks that level. And there's a 1083, 1082, holding 3,000 shares. Trading it through that level. We're coming up to another halt here. All right, halted again. So let's watch for possible resumption in about a minute. So holding 3,000 shares. Okay, resumption there, 1122. If it breaks 1122, that's new high. That's a spot to add. I tried adding and I didn't get, actually, I tried adding and my orders didn't fill. Now we're going up to 1250. Now we're skipping $0.50 and whole dollars. 1245, next add spot. Strong dip there. Possible buying opportunity. It is extended. Holding at 1206 average. Wow. Taking some profit as it goes through that level. It's the right move. I was red on the trade for a second. New orders at 13. Feels top heavy, right? Doesn't it feel a little top heavy? So our high is around 1280, holding 10,000 shares. Watch back over 1250. It's up 640%, which is phenomenal. If it breaks the $0.50 of 1250, I would expect a pretty tight. Look at that. Yeah. See it? It happened so quick there. Now look for 13. And a little bit of a false break there. So that's a false break. It is top heavy. And we start to get those false breaks as it gets a little top heavy. But then look at that recovery. Let's just back that up. So we got a false break. It dropped down here to 12. I'm holding 10,000 shares, 12.18. So flat on the position now. Got out the rest break even, roughly. Then watching, and look at that rip right back to the high. Added back 6,000 shares for 13. Now looking for 14. Added right there 17,000 shares. Looking for 1375, then 14. 1448, taking some profit off the table. There's 1448 up to the halt level. And then unwinding the rest of the position. Halt levels are a little tricky with nicey stocks. It can be hard to tell. And then there it moved up again, taking that out. Look at that. Just incredible. That is parabolic momentum. Now you can tell that that is a little different than what we had on CAR. CAR has a bit less volume compared with the sort of the time. The CAR, it's a little bit later. It's got 14 million shares, whereas RHE had about 12 million at that time. But RHE was just like ripping kind of straight up and on pretty solid volume. The spreads weren't too bad. CAR, much bigger spreads. A tricky one. And fantastic for anyone that got a piece of it. For me, I didn't trade it at all. So from a high of 545 all the way down to 373, now bouncing. Highest volume is now on this red candle right here. OLB was an easier one for me to manage risk on and to trade, and even on that one, I left a lot on the table. We got that move right there, which I didn't trade. That was a bit of an ABCD setup for a break through the high. First at 79, then 23, goes to 923, all the way up to 12. Pulls all the way back down, then comes all the way back up. So it has a high of 1250. You've got news on this one, which is good to see. Chart history is not bad. Certainly would be better over the high of this candle because that candle is red. That's 1640. CAR, the chart on this one, I mean, this is like a monster. That's crazy. That's really, really impressive. But certainly not a time to be an investor. It's up so high, so just for trading. So already today, there's been a couple of opportunities. SBEA, this one, traders seem to have lost interest in, from $10 to 16 or 15.50, but then came back down. So I have a ton of live trading archives of these, but I don't want to. I'm not going to go through all of them here, and most of them, of course, they're all available for Warrior Pro students. You guys can watch them. But so we had parabolic momentum on RHE, we had ACY, we had SLS, we had BPTH, and then there's a bunch that just go into the archives, and then chapter 8, setup 8, part 2, low float and or low volume parabolic squeezes. So, some of these ones, just to show you, can be really incredible. Stocks that go on very light volume up $10, $15, $20 a share. These ones are a little different. These ones are hard in a similar way as CAR because the volume is light, and so it can be, and the spreads can be big, so it can be hard to take enough size to do really well. But occasionally, if you're in early enough and they have news or something like that that helps you find it, then those can be good. So are there any questions that I can answer here? You're welcome. Can you please teach on where to buy on the candle, how I set up a stop loss, and where to take profit? So, in short, we can go back to OLB. Let's look at OLB because this is one that I traded today. So OLB, where that arrow is right there, that was a spot where I took a trade. Why did I take a trade there? Well, we had this pre-market pivot at 840. It was a high. It was a level that was tested right here, and again right here, roughly, and again right here. So I believed that if 840 broke, we would likely see a retest of the high of 870. And if we broke 870, then a move up towards 9. So in this case, and we had tested it here as well, I thought that this was a bit of a cup formation. This was the handle. And so as the handle was forming, I began accumulating here. My mental stop was the low of this pullback, but really it was about at the volume weighted average price, which is the orange dotted line. So stop at the VWAP in this case, not a live stop order, just a mental stop. So the place where I'm thinking if it breaks that level, that's where I should probably get out. And as long as it holds, roughly holds, then I'll keep holding as well. The profit target, well, initially we're looking for a breakthrough 840 and then 870. And it does. It hits a high of 875, it pulls back, and then it breaks through up to 923. So a little choppy on the break, but did break through that level. But to give you a more complete answer, where I get in and where I get out, that is the basis of the strategy. Really, what I've shown you here is just a type of stock. It's a stock type. That's what it is. It's parabolic momentum. So right in here, chapter 8, stock type, breaking news, reverse splits, recent IPO, blue sky, SPACs, gap down reversal, intraday continuation, intraday parabolic squeezes, parabolic momentum. Those are just stock types. Those are the types of stocks that I like to trade. And the type of stocks that are most likely to experience any of these things and give us parabolic momentum, those are going to be ones with a certain type of float at a certain type of price and typically with some type of news. Now the actual entry, first pullback, second pullback, ABCD, half dollar, whole dollar, micro pullback, buying a break of the high a day, VWAP breakout, buying into or out of a halt, dip buy. That's the strategy of where I'm actually buying. So this section right here, this section right here, this section right here, this section right through here, and this section, this is all strategy. But this video today has really been more just on the characteristics of parabolic momentum. The stock type, the stock condition. Dip trades, again, I already have a class on that and a video on that on YouTube. And actually, it's because of how popular that video has been that I wanted to teach this one. And we'll see if this one is as popular or maybe more popular. How to trade parabolic momentum. It's certainly topical to the market that we've been in. So essentially like I said, I don't use stop orders. I don't use live stop orders. I have mental stops, which is just me saying, if it breaks below this level, I'm going to press the sell button. So if I'm pressing the sell button, and I can do that by actually pressing the button sell, or I can do that by actually pressing a hotkey on my keyboard. So however I do it, usually it's with the hotkey, it is a marketable order. So I'm just selling when I exit on that type of sort of like have to cut my loss. I'm usually selling at the bid price, which in this case is 2 points lower than the ask. So I always would prefer to avoid being in a situation where I have to hit the bid. And that means I have to be thinking about, where can I be buying, where I have a higher likelihood of having a really nice breakout. And then if we get that breakout and we get a squeeze up through new highs, can I take profit on the ask? That way I'm not hitting the bid. So that would be my preference. Again, that's more of a study of level 2, time and sales. Tape reading is a very important component to being a successful trader. It's something that I talk about extensively. Chapter 6, tape reading, level 2. To being a successful trader, at least in the strategy that I trade. I know that there's some students out there and traders out there that don't use level 2 in their strategy, and it's just because their strategy is different from mine. So, and let me just log in here. Again, I wanted to do this on YouTube. I hope you guys please hit the thumbs up. I hope you are subscribed to the channel. And so this is the revamp. Welcome to the new Warrior Trading YouTube channel with 908,000 subscribers. And we are going parabolic. Looking for 925, 950, 975, and then 1 million. And then I can trade in this old thing for the million subscriber badge, $1 million badge, I was thinking. I'm excited. It's been really fun putting out content on YouTube, and so revamping the channel to featuring the most popular content, the videos that are going viral, some of them. 9.3 million views right now on this class, 1.2 million on this one, 1 million on this one, 500,000 on that. Let's see. And then, oh, here we go. This one is, this is the one that I mentioned before, this dip, how to buy the dip, gap and go, how to trade breaking news. A lot of these are super popular. Some of the most watched or must-watch day trading videos. Some of the really popular live trading archives, 900,000 views, 800,000 views. So the focus here is trying to put together the type of content that the community on YouTube is enjoying the most. So let's see. And you know, it's hard when you're trying to create content because you don't really know. You don't know what people are going to like, and sometimes I'll spend a lot of time working on a video, and then no one likes it. You know, it just doesn't take off, and it feels a little disappointing. You think, huh, that's weird. I really thought people would have liked that, but then one that you didn't really expect would be all that interesting ends up being quite popular. So yeah, and I appreciate that comment on monetizing the YouTube channel. I've certainly thought about it. And there may be a point where that, you know, you make some extra money. But so I'll never say never. But one of the things that's nice is that for really long videos like this, that you guys, at least right now, are able to watch these without getting interrupted by ads. So I don't even know how much, you know, how much would you even make on a 9 million view, 10 million view video? You know, I mean, I don't know. Like, I don't even know. You tell me. A couple $1,000 maybe? Like that feels like it's not really worth it. But maybe you'd make more. I think the people that probably make a lot are the people that make those hamster videos that get like 200 million views. And then that was the moment that I realized I'm really in the wrong industry. Let's see. So I'm just looking for this particular one here. Yeah, so so like this right there. So you could just see how this one just those are the views. And so that's, you know, the YouTube community saying, we like this video from the beginning and we keep liking it every single day that it's out there. And what happens with a lot of videos that people post on YouTube is that, you know, they get views when they first get posted and then they just flatline and they go stale. So that's what I'm kind of watching. And the videos that I have out there, a lot of videos that are really awesome content, but they're just flatlining or they've gone stale, I'm archiving those. They'll be available for Warrior Pro students. We'll put those aside. But for YouTube, I'm only going to have the videos out there that the YouTube community seems to enjoy and appreciate. Like I said, I really don't think the best path for learning how to trade is just trying to piece together 500 or 600 different YouTube videos. There's some people that are going to do that. I don't think that that's the right path. And for a couple of reasons. One, you're trying to read between the lines. You're trying to put the pieces together. Now, the puzzle has already sort of been laid out in a curriculum, but you're saying, I don't want to go through the curriculum. I just want to kind of figure this out on my own. But if you're taking things from 5 years ago, well, market changes. I'm using different tools today. I'm using different tools for news, different tools for scanners than I used 4 or 5 years ago. So older videos some of them can still be relevant. Some of the live trading archives can still be relevant, but others are not. And so I think it makes more sense to focus on finding a cohesive curriculum, one that you can relate to, one that you understand. So if this is a strategy that you think you like and you're interested in, that's awesome. And I'd love to teach you more about it. If you could say right away, no, this one's not for me. I want something where, I can set it and forget it, check it on my phone and, maybe trade some options. Fair enough. You got to do what's right by you. But my focus on revamping the YouTube channel is to put out the content that you guys are really liking. And if that helps us cross over 1 million subscribers, then that'd be pretty cool. Let's see. And someone said 9 million views would be $63,000. So $63,000. Well, that'd be 9 million views. So that video has been posted for a long time. So it's not nothing, but yeah. All right. So, well, this has been an awesome class. I hope you guys have really enjoyed it. It's 11:30 and I'm sitting here green on the day and certainly left a little money on the table, both on OLB for sure. OLB went a bit higher. CAR, well, left the station without me, but of course, what goes up comes back down, and this is a bit of a head and shoulders pattern. So you have to be mindful not to get caught in chasing FOMO. You start getting that FOMO, the fear of missing out. You start chasing. Next thing you know, you're buying higher, and it works until all of a sudden you're caught in a halt down. And look at this. You wouldn't have had much of an opportunity to get out when it dropped from 545, and halted down at 580, then halted down a second time at 450. And then all of a sudden you're looking at a 100-point loss. A couple thousand shares, you're talking about $200,000-$300,000 losses. Ugh. That's tricky. So take it slow, one day at a time. Don't give in to that FOMO. We all know the market will be here for us. So question from Steve, what's the benefit of using Lightspeed? Well, Lightspeed compared to a broker such as TD Ameritrade, TD Ameritrade is going to be TD Ameritrade, it doesn't cater to day trading. It doesn't cater to day traders. I'm a day trader, so I'm looking for the type of software and the type of broker where I can get in and out quickly, and that means a platform that is very stable, very fast. So that is a benefit of Lightspeed. It's a stable, fast platform. That's something that, of course, I really like about it. I also like the fact, and I'll just put this up here. So this is the Lightspeed platform. So I can type in ZVZZT, NASDAQ test stock. I'll just do it here, ZVZZT. So I can buy the test stock just by pressing one button, just like that, I'm in. Now you can set up hotkeys with TD Ameritrade as well. I found them, in my experience, to be a little finicky. I didn't find them to be super reliable. And while you can mark it in or mark it out, well, I don't know that I really want to use a market order. I don't mind using a marketable limit order, but not a market order. So for me, a marketable order would be an order 10 cent offset above the ask or something like that. So it fills right there. Now, Control X, I'm selling half. Control X, I'm selling another half. And so you can see how fast I'm getting in and out. This is a NASDAQ test stock. The fact that you can move that quickly is helpful when you're trading a fast-moving stock, and certainly something like CAR, really anything that's parabolic, will be what I would consider to be a fast-moving stock. That's not going to count against my P&L because it's a test stock, just by the way. So the direct access routing, the direct routing to a stock or commodity is not an indication to buy or sell that stock or commodity. Ross's results are not typical. Please do not attempt to mirror trade or blindly follow Ross or anyone else. You should always trade a simulator before trading with real money. This does not represent our full disclaimer, which you could see over there. So OLB, it starts hitting the scanner, and I saw someone mention OLB news. So when I heard news, I thought, okay, well, I'm interested, but what's the float? Oh, it looks like I lost internet just for a second there. Sorry about that. So I said, I need to know what the float is. I'm not totally clear. Now, if this hadn't been hidden right here behind my my broadcasting software, I would have seen it. But I didn't see what the float was. So I had to go over there and click on it. I had to type in the chart. And by the time I got back over here to enter the order, it was already had gone from 550 to like 650 or whatever. So I chased it a little bit. I got in a little bit higher, but it's not the end of the world. It's fine. So anyways, yeah, but that even then, if I'd been with TD or something like that, it would have been even slower, most likely. So I kind of put E-Trade, TD Ameritrade, in the same boat in terms of performance. I've used both of them before. I don't really like either of them, and that's kind of where I sit. Okay, let's see. Any advice for the mental block of not being able to hit the buy button? So in my experience, that hesitation is about fear. And you might have noticed today on SBAE, I did hesitate. It would have been my first trade of the month. It was going higher, but I just felt like something about the level 2, the way it was trading was kind of funny. And I just kept hesitating, and then I kept kind of missing it. And then I finally took a trade on it, and then I was red. And so usually to me, I'm hesitating because I'm afraid of loss. And so for me, I now use that as something I try to be aware of, and it reminds me to go slow because that intuition is probably educated. For a beginner trader, that fear is a healthy fear, and one of the easier ways I think to overcome it is conditioning yourself by trading with small size. So trading with a simulator first, and then once you've proven profitability with a simulator, trading with real money, maybe you trade with one share. It's like playing like gambling with like 10 cents or something. I mean, and I don't like to think that day trading is gambling, but we know that some traders gamble and they just throw their money in the market. And we know, of course, that like gambling, there's a high risk of loss. So approaching it, from a mindset of how much am I willing to lose, and starting with very, very small levels of risk, I think is a smart way to do it. Now, getting myself to hold on to winners longer is a struggle for me because I have had so many trades. And you know what? Even the trade on SBEA, I sold half going into the halt, and then the rest, I sold break even on resumption at like 15. So yes, small size builds confidence, right? And then naturally, when you have the confidence, you'll start knowing to take bigger size. But yeah, it's the day you don't take profit is the day you think, man, I should have sold the whole thing. The day you do take profit is the day it ends up going another 10 points, and you're like, man, I can't believe I sold so soon. Like I said earlier, the market can make you feel kind of dumb because you're trying to predict what's going to happen next, and no one can do that with 100% accuracy. So you're always going to have days where you're like, wow, I really left a lot of money on the table today. I can't believe it. I didn't even trade CAR. So, of course, I'm sure there's people who traded it and lost on it. And we always think, well, if I had traded, of course I would have made money. You don't even think it's possible you could have lost because the way we are so biased. But in fact, of course, you could have easily. And I could be back to break even today if I'd gotten in this too high. That spot, I was looking at that dip around 460 or whatever it was, and then right into the halt down. So selling half is one way that I pay myself and then hold the rest for a little bit of a bigger trade. And when the market is really hot, I will get more aggressive holding longer. The market was pretty hot yesterday. It has been pretty hot the last few weeks, and certainly today it's really hot. So I think we're in a pretty good market, and I'll try to be I'll try to be mindful to hold a couple of those a little longer. And when we start seeing something that's clearly going parabolic, like what we saw in RHE, then that's the time to start giving it a little bit more space. But it's only once they start to open up. So there can be a lot of trading as it's starting to move higher, and then when it starts to really open up, that's when I'll say, okay, let's see what this thing can do. But yeah, so anyways, I think that's it for me. I'm gonna turn off the broadcast and end the class. I hope you guys have enjoyed it. I hope this ends up being a popular video, and it's certainly topical for today, so in the market we're in. So I hope it's enjoyed, and again, just a, you know, kind of like preview of what it's like being a student in the classes, and the level of content, the level of detail that we have. This was a bit of a breeze over that chapter. I didn't go into as much depth as I would have in the classes, and we did have more live trading examples, but just gives you a little taste of what it's like. So thanks again, and I'll be back at it first thing tomorrow morning. We'll be looking for breaking news. We'll be looking for the next one that catches some momentum. All right, I'll see you guys then. Bye, everyone.